Good afternoon, Stephen.
Yolanda, we had that gold price, $1,215 an ounce, so it seems that there is no stopping this gold price. Are you seeing this really on the back of the weakening dollar?
Yes, Stephen, we see a lot of investors moving into precious metals. And if one looks at the graph for gold, we see the last two peaks at 700 and then at 1,000. And we're expecting gold to go all the way up to $1,300.
What's going to support that move to $1,300? Is that purely on the assumption that the dollar will continue weakening against the euro?
Yes, we do see that, and there is the United States does want a weaker US dollar to improve their exports. We're seeing global nervousness in the US dollar, so really we do expect it to go to see further weakness there.
And of course, we are seeing lots of central banks buying up gold. We're seeing speculators going into gold, exchange-traded funds increasing their holdings as well. So gold really kind of changing the dynamic recently and becoming more of a currency than a commodity as well.
Yes, it is. You know, investors are moving away from paper-based assets into precious metals, and really looking for security in terms of assets, tangible assets they can sell.
$1,300 an ounce, and what sort of time frame is that going to come anytime soon? Because we have seen it gaining lots of ground over the past few months. So if it continues at this pace, it could reach $1,300 in the not too distant future.
Well, Stephen, we possibly will see some pullback from profit taking, but we expect to see 1,300 definitely in the short term, hopefully by Christmas, and possibly into the new year.
And of course that has helped support our gold stocks. We've seen other resources prices also improving. And of course the resources index really supporting the overall market this afternoon.
Yes, even really markets are very quiet. Really only the gold stocks that are leading the market higher. Investors probably quite disappointed to see us not rallying as we've seen global economies leading higher. So quite disappointing in terms of the other stocks in the market.
Looking at the rand, it went as strong as 722 this morning. It's back around the 730 level, but obviously finding some support from that stronger gold price and that weaker dollar.
Yes, Steve, 720 is a strong dollar-rand support level. If we do see the rand strengthen below 720, we could see it come down all the way to 705. So quite a key technical level.
Of course, really mixed fortunes for the gold miners though, so while they are benefiting from that much stronger gold price, that stronger rand is also going to kind of perhaps take away some of the gains there.
Yes, it's definitely eroding their earnings. The gold miners really need a gold price at $825 for them to be able to recoup costs and make margins. So really our gold miners really suffering at these levels.
Well, as you said, volume's a bit thin today, market's a bit uncertain, but of course we are heading into silly season, so can we expect volumes to continue thinning down as Christmas approaches?
Yes, Stephen, we've seen even in terms of the global markets, low volumes, especially after Thanksgiving. We're going to see everything slow down, and we're going to see a lot of investors, probably your pension funds, taking money off the table. We've had a nice run, cash in, and then enjoy their Christmas and come back and start again in the new year.
Of course, at the end of last week, we had a bit of a sell-off, Thursday, Friday particularly, and that was after the Dubai issue broke. And that seems to be water under the bridge as we get into the middle of the new week.
Well, Stephen, the market seems quite weak today, and we did see some news out in terms of Europe with some concerns from the banking side. So we're seeing European markets coming off lower. We're seeing our S&P not really knowing which way we're going to go. Markets are really looking for some direction, for some good news, and we haven't really seen that today. We don't have much numbers out this afternoon. We do have some unemployment numbers out in the States, which might, we do see it as a lagging indicator, but those numbers would have to come hopefully within line, and we could see us probably quiet for the rest of the afternoon.
Of course, we had our own numbers out today. That was car sales data for last month. New passenger sales haven't come off very dramatically. So it looks like the worst is past for the motor industry in South Africa at this stage.
Stephen, yes, those numbers coming down at a declining rate, which is great. And if you look at the numbers underneath, consumer cars, are pretty much in line with what we saw last year this time. However, we do see a very big decrease of almost 40% on our commercial sales, which is quite concerning because, you know, companies are obviously going to look into next year. In terms of their projects, they're not going to be ordering new vehicles, and we could see, if we reference it to Imperial's results that came out yesterday, really supporting those numbers that we actually got out today.